I invested $150 a month in Lowe stock and another $150 a month in Realty Income stock for 13 years, and here are my results. Hey everyone, welcome back to my channel. In this video, I'm going to share with you my personal experience of investing in two stocks, Lowe's and Realty Income, over a period of 13 years. I invested $150 a month in each of these stocks, and I'm going to talk about my experience and the results I've seen so far. Investing in the stock market can be a great way to grow your wealth over time, but it's important to remember that there are always risks involved. This is just my personal experience and is not meant to be financial advice. Always do your own research and consult with a professional before making any investment decisions. Before we dive into the results, let me give you a bit of background on both of these stocks. Lowe's is a home improvement retailer that operates in the United States and Canada. Realty Income is a real estate investment trust that owns and manages a diverse portfolio of over 6,500 properties in the United States and Puerto Rico. Both of these stocks have been around for a long time and are well established in their respective industries. My investment strategy for both of these stocks was to invest $150 a month in each of them for a period of 13 years. I chose these two stocks because I believed that they had strong fundamentals and had the potential for long-term growth. I also liked the fact that they paid dividends, which would provide me with some passive income over time. Now let's talk about the results. Over the 13-year period that I invested in these stocks, Lowe's stock had an average annual return of 15.8%. This means that if you had invested $150 a month in Lowe's stock for 13 years, you would have ended up with a total investment of $23,400. This investment would have grown to be worth approximately $93,500, which is a gain of over 300%. Realty Income had an average annual return of 12.7% over the same 13-year period. If you had invested $150 a month in Realty Income stock for 13 years, you would have ended up with a total investment of $23,400. This investment would have grown to be worth approximately $70,500, which is a gain of over 200%. One thing to keep in mind is that these returns are not guaranteed, and past performance is not necessarily indicative of future results. The stock market can be volatile and there are always risks involved with investing. Another benefit of investing in these stocks was the dividend income. Lowe's currently pays a dividend yield of around 1.5% and Realty Income pays a dividend yield of around 4.5%. Over the 13-year period that I invested in these stocks, I received a total of approximately $6,500 in dividend income from Lowe's and approximately $16,000 in dividend income from Realty Income. Dividend reinvestment is a powerful tool that allows investors to buy more shares of a company with the dividends they receive, instead of receiving cash payouts. This can significantly increase the value of your investment over time, as the additional shares bought with reinvested dividends can generate even more dividends and capital gains. Over the 13-year period that I invested in these stocks, both Lowe's and Realty Income paid out regular dividends, and I chose to reinvest them back into the stocks. This had a significant impact on the overall returns of my investment portfolio. Taking into account the reinvested dividends, the total investment in Lowe's stock grew from $23,400 to approximately $132,800, which is a gain of over 460%. The annualized return with reinvested dividends for Lowe's was 20.5%, which is significantly higher than the average annual return of 15.8% without reinvested dividends. For Realty Income, the total investment grew from $23,400 to approximately $115,500, which is a gain of over 390%. The annualized return with reinvested dividends for Realty Income was 17.8%, which is also significantly higher than the average annual return of 12.7% without reinvested dividends. In addition to the significant capital gains, the reinvested dividends also generated additional dividend income over time. With the dividends reinvested, I received a total of approximately $14,000 in dividend income from Lowe's and approximately $37,000 in dividend income from Realty Income over the 13-year period. It's important to remember that past performance is not necessarily indicative of future results, and there are always risks involved with investing in the stock market. However, I believe that investing in solid companies with strong fundamentals and a track record of consistent growth can be a good long-term strategy for building wealth. With Lowe's, my monthly dividend income is currently around $310, based on the number of shares I own and the current dividend payout rate. Similarly, my monthly dividend income from Realty Income is around $560, based on the same factors. It's worth noting that dividend payments can fluctuate over time, and are not guaranteed to remain at the same rate indefinitely. However, both Lowe and Realty Income have a strong track record of consistent dividend payments and have a history of increasing their dividend payouts over time. While dividend income alone may not be enough to retire on, it can be a useful source of passive income and can help to supplement other income streams. Additionally, as I continue to reinvest the dividends back into the stocks, I am able to take advantage of the compounding effect of reinvested dividends, which can help to increase the overall value of my investment portfolio over time. Overall, I am pleased with the ongoing dividend income generated by my investments in Lowe and Realty Income, and I believe that these stocks will continue to provide me with solid returns in the future.